Hi everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments weekly talking points for the week ending December 10th, 2021. Let's get into stocks. Equities were up across the major global indices last week, with the gains were led by the U.S., with the S&P 500 up 3.85%. The Russell 2000 added 245, and the NASDAQ was up 3.62%. Now, the international developed markets gained 2.44, while the emerging markets was up 1.15. In the U.S., the best performing sectors were technology, while energy and consumer discretionary and utilities were the laggards. Now, in fixed income, interest rates rose across all maturities and fixed income values declined. The 2-year, 10-year, and 30-year Treasury rose by rates of 7, 13, and 19 basis points respectively. Now, bond investors are focused on comments from the Federal Reserve December 15th meeting, in which they are expected to disclose a timetable for the process of tapering its stimulus. So what you're going to see is not so much money coming in, not so much issuing of bonds, maybe an interest rate adjustment. We're going to see rates go up a little bit. So we'll see how that goes. Let's talk about commodities. Oil prices rose last week. The price of West Texas crude rose 8.16% to $71.60 per barrel. Talk about economic data. The U.S. price index rose 6.8% in November from the same time a year ago. Huge increase. It's the highest in nearly 40 years. This was an acceleration from 6.2% the prior month. So unit labor costs increased 9.6% annualized rate in the third quarter, well ahead of consensus expectations for an 8.2% increase. Labor costs were driven by a 3.9% increase in hourly compensation and 5.2% decline in productivity. Now, new applications for unemployment benefits sank to a 52-year low of 184,000 in the last week of November. The 42,000 decline from the previous week is likely due to holiday-related hiring, together with the reluctance of employers to lay off workers in a tight labor environment. Can't find any workers. There's still 7 million jobs available out there. So we have a problem right now. So hopefully we're going to see people get back to work, because we're still seeing, there's still so much money out there, and there's such a huge demand. So we're seeing inflation go up like crazy. Hopefully, again, we're talking about transitory. Now they're saying it's not transitory. We've been talking about this all year, that it's not transitory. Some things will be, but once the supply chain starts to go, then things will come down. But with the rates of everything and the price for employees, you're going to see things. We're going to be higher inflation for a little while. Let's talk about company news. Broadcom, which is a G50 holding, rose 13.8%, 18% last week after reporting revenues and earnings that beat consensus estimates, and management raised guidance for the full year. Additionally, the board announced a new $10 billion share buyback program and increased the dividend by 14%. So the new yield is 2.6, which is why we buy the G50, for that dividend income, right? To help with income in retirement. And look at CVS Health, which is a G50 holding, raised its revenue and earning guidance prior to its annual investor day. The board also announced a 10% increase to its dividend and authorized a $10 billion share buyback program. Shares rose 8.79% for the week. So remember, we talk about the increase in income, dividend income. That's why they're in the G50. Costco Wholesale, which is Contrarian and Core Select Holding, reported revenues and earnings that beat consensus expectations. As compared to store sales, rose 10% year over year. Shares were up 5.65% for the week. That's it. That's it for this week. We want to thank you for being part of our ARA family. God bless you. And of course, if you need any help, give us a call at 855-756-5700 or visit us at aradvisorsinc.com. We're looking really forward to seeing you at our Christmas party, so we hope you can make it. And if not, we'll do one more update next week. And if we don't see you, God bless you. Have a Merry Christmas, and we'll see you in the next video.